Another thing about it is math, and the kind of math you need to do this. I don't use a computer. I don't have a computer. I really was doing great math. I remember one day, I think it was ninth grade, it was a grim day. Somebody introduced cosine. That day, I mean, remember cosine? I mean, has anybody used cosine the last couple of years? I mean, that is such garbage. You don't need this for the stock market. If you can add 8 and 8 and get fairly close to 16, that's all you need. You say 400 million in debt, no equity, no cash, losing money, forget it. They get 300 million in cash, no debt, 200 million in net worth. They're losing 10 million a quarter, but they'll be around. That's all you need. That's all you need. That is not that hard. If you made it through 5th grade math, you can handle this stuff.
A great IQ is not needed. I mean, you do not have to be terrifically smart to do well as an investor at all. The proof is in my record, actually. From 11 to 19, I read every book there was on investments, and I didn't do well at all. And I had no real investment philosophy. I had a lot of things I tried. And I read Ben's book in 1949 or 49 when I was at the University of Nebraska, and that actually just changed my whole view of investing in terms of the basic approach of going about investing, which is to think about stocks as businesses and then think about what makes a good business. And really that's all there is to investing and having a margin of safety, which Ben talks about, and so on. It's not a complicated process, but it definitely requires discipline. It requires insulating yourself from popular opinion. You simply can't pay any attention to it. It just doesn't mean anything. So the idea of listening to lots of people tell you things and all that, it's just a waste of time. And you'd be better off just sitting and thinking a little bit.